Hello friends, I'm Vivek Pandit and today we are going to provide you with some very interesting and informative information, and that is regarding different small schemes that are available for borrowers who cannot afford to take more. They have limited capacity, so these schemes which we are going to talk about today, they are meant for small borrowers. So in case you feel that your requirement is for less and you can start your enterprise with a less amount, then this presentation is entirely meant for you. So there is one scheme which is headed by SIDBI, Small Industries Development Bank of India, SIDBI, and they are heading a scheme which is called SMILE, SMILE, Soft Loan Fund for Micro, Small and Medium Enterprises. So this is available for industry of agnostic. The sector is agnostic. Eligibility: any new enterprise which wants to take up manufacturing as well as any service sector can apply under the scheme. So in the scheme, Indian government provides a soft loan, term loan on soft terms to micros, small and medium enterprises to meet their debt equity and pursuing opportunities for growth of their MSMEs. Then what is the fiscal incentive? For general category, 10% of the project cost, subject to a maximum of Indian national rupees 20 lakhs, is provided as the loan amount. It increases to 15% for the enterprises promoted by STSC categories and persons with disabilities as well, and even women, subject, and to their maximum is 30 lakh of rupees. Time period: for which period such soft loans are provided. On expiry of 3 years from the date of the first disbursement, the outstanding soft loan together with any dues thereon shall be converted into a secured term loan, and the entire loan shall carry an applicable rate of interest as per internal rating of the borrower. So this is a scheme which is headed by SIDBI and known as SMILE, which you just might be interested in. There's another scheme launched in 2016, the April of 2016, Stand Up India, and it is also headed by SIDBI, the Small Industries Development Bank of India. And this loan can be or help in this scheme can be adopted by enterprises, can be the trading enterprise, manufacturing or service. So any of these enterprises can take advantage of the scheme. In the case of non-individual enterprises, at least 51%, I beg your pardon, 51% of the shareholding and controlling stake should be held by an ST/SC category individual or a woman entrepreneur. Time period: the loan is repayable in 7 years with a maximum moratorium period of 18 months. What are the fiscal incentives? Composite loan between 10 lakhs and 1 crore to cover 75% of the project cost can be taken up, and that is inclusive of the term loan and the working capital. So this scheme by the Indian government facilitates bank loans between 10 lakhs and 1 crore of rupees, as we just mentioned, uh, to at least one scheduled caste or one scheduled tribe borrower and at least one women borrower per bank per branch for setting up a greenfield enterprise. So this is what Stand Up India is all about. A very interesting scheme is Pradhan Mantri Mudra Yojana, which is headed by Mudra, Micro Units Development and Refinance Agency. And eligibility factor: all kinds of manufacturing, trading and service sector activities can get a loan under Mudra Yojana scheme. Overview: the Mudra provides refinance support to banks, MFIs for lending to micro units having loan requirements up to 10 lakh of rupees. And what exactly are the physical incentives? Loans up to 10 lakhs, issued by banks under micro small enterprise are given without any collateral. These interventions Mudra ensures to meet the requirements of different sectors, activities as well as business segments. So this is what Pradhan Mantri Mudra Yojana is. So there are different schemes and we've just started, we just covered two, and we'll be taking up more such schemes which just might be of use to you. So Dairy Entrepreneurship Development Scheme, this is headed by NABARD and National Bank for Agricultural and Rural Development, and this is applicable for pets, agriculture, animals, social impact, food and beverages sector. Eligibility: farmers, individual entrepreneurs, NGOs, companies and groups from the unauthorized and organized sector can apply under the scheme. So Indian government aims to bring structural changes in the unorganized sector so that initial processing of milk can be taken up at the village level itself and bring about upgradations of traditional technology to handle milk on a commercial scale. This is just one of the examples which the kind of change that the government of India wants to bring about. What are the incentives? The incentives differ with respect to the cost of the required equipment or establishment of the facilities. Moving on, we talk about the Venture Capital Assistance Scheme. This is headed by SFAC, Small Farmers Agri-Business Consortium. Industry applicable is of course agriculture. Eligibility: it is open for professional management and accountability. The groups has to be preferably formed into companies or producer companies under the relevant act. SFAC has formed tie-ups with 41 banks to provide financial support, so there won't be much of a problem here. Fiscal incentive: the quantum of SFAC venture capital assistance will depend on the project cost and will be the lowest of the following: 26% of the promoter's equity and 50 lakhs in Indian currency. All of this is part of the fiscal incentives. Now there's another scheme called the Credit Guarantee Fund Trust for Micro and Small Enterprises, CGTMSE, and the eligibility is applicable for new and existing micro and small enterprises who are engaged in manufacturing or service activity. The scheme was launched by the Indian government to strengthen the credit delivery system and facilitate the flow of credit to the MSE sector. What are the fiscal incentives involved here? Both term loans and or working capital facility up to the tune of 200 lakhs per borrowing unit are being provided. Coir Udyami Yojana. So Coir Udyami Yojana is a credit linked subsidy scheme for setting up of Coir units with project cost up to rupees 10 lakhs plus one cycle of working capital which shall not exceed 25% of the project cost. So what are the main objectives? To modernize the coir industry, to increase the efficiency and productivity for enhancing the earnings of the workers, and to enhance the utilization of coconut husk, and for increasing the production of coir fiber and coir products. Again, to generate employment in the rural areas of the coconut nut producing states or union territories, to enhance the socio-economic conditions of the producers, workers engaged in the business, and to provide backward forward linkages to the units holders to whom assistance is given under the scheme. So this was Coir Udyami Yojana, and let us further move on and see what are the quantum and nature of financial assistance. So Coir Udyami Yojana, it is a credit linked subsidy scheme for setting up of coir units with project cost up to rupees 10 lakhs plus one cycle of working capital which shall not exceed 25% of the project cost. So the pattern of assistance under the scheme is 40% of the project cost is borne by the government of India, 55% as loan from bank and 5% as beneficiary contribution will be also included. Under the CUY scheme, marketing support assistance to the beneficiaries for the following interventions will also be considered. For providing financial assistance, for establishing marketing consortiums of CUB beneficiaries, for reimbursements of expenditure incurred for participation in fairs, exhibition, so that is also permitted, for hiring showroom spaces, for reimbursement of personnel employed in the consortium. However, subsidy will be compounded excluding of working capital component. Now, let us move forward and study the quantum and nature of financial assistance and what are the eligibility conditions of being the beneficiary. So, any individual above the age of 18 years can apply. So, of course, that individual has to be an Indian citizen, and there will be no income ceiling for assistance for setting up of project under Coir Udyami Yojana. Assistance under the scheme is only available for projects for the production of coir fiber, yarn, products, etc. coming under coir sector. Assistance under the scheme will be made available to individuals, companies, self-help groups, non-governmental organizations, institutions registered under Societies Registration Act of 1860, production company, cooperative societies, joint liability groups and charitable trust. These are all who are going to be the beneficiaries of under the scheme. So, what are the eligibility conditions? Any individual above just mentioned above 18 years, there will be no income tax income ceiling for assistance for setting up of the project. Assistance under the scheme is only available for projects for the production of coir. Assistance under the scheme will be made available to different individuals that we have already discussed. What are the eligibility conditions of the beneficiary? For setting up of agri clinics and agri business centers in order to supplement efforts of public extension by necessarily providing extension and other services to the farmer on payment basis of free of cost as per business model of agricultural entrepreneur. Local needs and affordability of target group of farmers who all are eligible: an unemployed agricultural graduate in subjects like agriculture, agri-engineering, horticulture, animal husbandry, forestry, dairy, veterinary, pisciculture and other allied activities including new emerging areas in agriculture sectors are fully eligible for enrollment as a beneficiary. Quantum of law: the outer ceiling for the project by individual would be rupees 20 lakhs, rupees 25 lakhs in case of extremely successful individuals, and for group projects overall ceiling of rupees 100 lakhs, whichever is less. So, now let us look at the margin contribution, and for loans up to 5 lakhs, nil for loans above 5 lakhs, which is 15%. So, all loans up to 5 lakhs, no margin money has to be deposited, and it is only above 5 lakh rupee loans that a 15% margin will need to be deposited in the bank. So, repayment period depending on the nature of activity that will vary between 5 to 10 years. The repayment period may include a maximum grace period of 2 years. That is when no amount of pressure would be there on the beneficiary to return the loan or the interest amount. Subsidy: composite back-ended subsidy of 44% of project cost for women, STSC and all categories of candidates from any and hill states, and 36% of the project cost for all others, that will be also provided. Security for loans up to rupees 5 lakh, hypothecation of assets for loans above 5 lakh, hypothecation of assets and mortgage of land or third party guarantee will need to be provided. Export packaging credit: the nature of facility is pre-shipment finance extended as working capital. Purposes for purchase of raw materials, processing, packing, transportation and warehousing of goods spent for export. Who are the target groups? Manufacturers as well as merchant exporters are eligible to avail rupee pack credit at concessional rate of interest. And what is the eligibility? Existing customers already availing credit facilities for us, that is number one. And margin percentage, the percentage of margin is determined depending on the nature of order, commodity, capability of exporter, etc., keeping in view the spirit behind RBI guidelines for liberal finance to the export. Pricing, they are maintaining competitive prices, you need not worry. The period for which the bank gives packing credit depends on the manufacturing, trade cycle or specific requirements of the individual export, normally not exceeding 180 days. And what is the processing fee? As applicable to cash, credit facility, working capital limits, the same will apply as the fee. So, technology upgradation fund, TUFs for textile and jute industry from the Ministry of Textile, Government of India has announced the following. So, weaving, preparatory and knitting, that is what this scheme offers. Processing of fibers, yarns, fabrics, garments and made-ups. So, all of the individuals running these businesses are eligible for that loan. TUFs, garment made up of manufacturing, handloom sector, silk and jute. Now, we come to the startup scheme. This is headed by Bank of India. Objective is to fund support for eligible startups recognized as per government policy. Eligibility, startups defined as per the policy of the bank. The unit must be eligible and certified as startup by the central government. The constitution of the unit should be private limited company, registered partnership firm and limited liability partnership. Again, this was the startup scheme, which is headed by Bank of India. Startup scheme, more information, quantum of finance to be assessed as per the project. Minimum is 10.10 crores, that is 10 lakhs, and maximum is 5 crores. Margin, term loan 25%, working capital, and 10% of the remaining sum will have to be provided. Rate of interest, is to be fixed on the basis of credit risk rating. 1% concession in application ROI received to maximum appropriate 1 year MCLR plus BSSS. So, there is more information on startup scheme. Bank of India, processing charges have been waived, other services charges will be as applicable. Credit risk rating as per extant guidelines, financing below green levels is not permitted. And security, primary or tangible assets including created out of bank's finance shall be charged in favor of the bank by way of hypothecation mortgage. Collateral, the facility may be covered under CGTMSE, credit guarantee funds for startups for the limits for which coverage is available and beyond the amounts covered under CGTMSE, credit guarantee fund for startups as mentioned above. Collateral security may be insisted upon by the sanctioning authority. And what is the guarantee? Personal guarantee of promoters, directors, partners of the firm, company, major shareholders having sufficient worth and of all mortgages of collateral security if any. So, the facility should be covered under credit guarantee over startups to be floated by NGTC upon implementation and if collateral security not obtained. You have to remember the facility may be covered under CGTMSE as per extant guidelines of CGTMSE. The fees for the guarantee cover, if any, they will be borne by the borrower. So, repayment is 12 months subject to the annual renewal as per extant guidelines. Term loans maximum door-to-door repayment is 120 months, including moratorium period of maximum 24 months. So, for the insurance purpose, comprehensive insurance of all the securities charged to the bank and with bank's hypothecation clause must be obtained by you from the bank directly. Validity of the scheme. So, any startup will cease to be startup if it has completed 10 years from the date of incorporation registration or if its annual turnover is more than 100 crores. Treatment of seed capital. So, any seed capital, venture capital invested by venture capitalist, angel funds should be treated as margin equity for calculations of DER. Let us move forward, and which is the complete information which this information provides you as a small borrower. You can take advantages of these different schemes that this presentation has provided to you. We really hope that you have keenly watched this program and will take full advantage in your enterprise, in your endeavor. We wish you all the best. Have a nice day.